NIO stock taking a beating today, down 13%. I'm going to be talking about why this beaten down stock, even year to date down 47%, is a bargain. Hear me out. I'm Sinofsky Stocks. Welcome back to the video. My name is Adam. On this channel I talk about mainly bargains in the stock market, as well as what's going on in the world and my portfolio and how I'm doing. I used to own NIO. I bought it when it was around $20 a share, and then I sold it I think when it was around $30 a share. And I'm happy I got out of it because we can see the price right now is under $20 a share at $17.56 US. Right now it's listed on the New York Stock Exchange. It is a Chinese electric vehicle maker. One of the main worries is not necessarily projections for future growth, but projections for being delisted from the New York Stock Exchange and it only being listed in China, basically. And what that means, if you're a holder, for example, one of my main positions is Alibaba. A lot of people are worried that if Alibaba gets delisted, that basically what happens to their shares. So two options. One, depending on your broker, you may be forced to liquidate your shares. Or two, they will start not only trading on the Hong Kong Stock Exchange, but maybe on an over-the-counter exchange. That is where Tencent, for example, trades on. It doesn't trade on the New York Stock Exchange. So will Didi. Didi will trade on the over-the-counter exchange after it gets delisted from the New York Stock Exchange. That's what happened to Didi, a ride-hailing company from China, where the CPP basically forced it to delist its shares. So you'll still have your shares unless your brokerage doesn't allow you to trade over-the-counter type positions. In that case, you'll be forced to liquidate at whatever the closing price is on the last day that it trades on the American exchange. So that's one concern. I don't think that's a major concern just yet. I think right now, sure, the whole world is focused on the Russia-Ukraine crisis, and a lot of people are saying that this could be the framework of what happens if, China, for example, were to attack Taiwan, right? Because what Ukraine is to Russia, Taiwan may be to China. And so a lot of, I know that China is making parallels to this. America is kind of getting ready, analyzing the situation. So we all have to be prepared for maybe an escalation of aggressions. And in retaliation, America might take off a lot of these Chinese companies off the stock exchange. However, I do think the president of the CPP, Xi Jinping, is a lot more calculating than Putin, and maybe less willing to take a risk like that than Putin. So I think that, if there is escalation, I think that it is still far away in the future. So I don't necessarily think we need to worry about delisting just yet. And again, I'm down quite big on my Alibaba position. I bought it, I think my average cost per share was around 160 bucks or something like that. Right now, the stock is trading at under $100, just ridiculous. I think it's such a bargain, and I'm continuing to buy it. But I'm also looking at this EV maker right now, priced at 27 billion market cap of US, of course. Over the past 5 years, we've seen a tremendous rise. 76% only, so maybe you'd expect more. This was getting close to bankrupt before the CPP basically stepped in and saved the stock, basically. And then we saw a meteoric rise of over 2,000% from basically $1 to over $60. And of course, we've seen this precipitous fall down 70%. And I think that it may be time to start buying, especially since, one, a lot of people are wary of growth companies. Two, the price of oil. Now we for certain know that we can't rely on oil not going to like $200 a barrel even maybe, which will drive electric vehicles in the long run. So I think that's the main bullish signal long run for EVs. And three, because people are wary of growth stocks and delisting, you can buy these stocks at basement bargain prices, just like Charlie Munger is doing with Alibaba. So 2 days ago, NIO popped. One of the reasons was also because it got listed also on the Hong Kong exchange. And also higher prices of gas, which makes sense, which makes EVs more attractive. But you also have to take into consideration the batteries of EVs require a lot of nickel, and nickel is at an all-time high. It jumped by like 75% over 2 days. I think like the London Mercantile or Metal Exchange had to like close for a week because of that unprecedented volatility. A lot of people are, looking into NIO and saying, okay, should I buy? It's basically down like 70% since its all-time highs, and it might be a bargain because it is still growing. So shares of NIO have most recently extended their downtrend due to unfavorable treatment of growth stocks across all sectors. Basically, macro factors are weighing on the stock market. NIO delivery numbers may be misunderstood too. So below 20, the stock is seriously oversold and ripe for a rebound. So this person, the Asian investor, produces three catalysts. You can also look at other automakers. I believe NIO is probably the safest bet. There's also XPeng and Li in China. Have seen a large drop off in delivery numbers in February. However, this drop in delivery volume can be explained by Chinese holidays and a lower number of trading days in February. There's only 28 days in February. Investors should expect a material rebound in delivery volumes in March. Of course, there's NIO delivered 6,131 models in the month of February, showing 9.9 growth year over year. So they delivered 6,000 models within the first year. I just want to compare that with something like Lucid Stock, which is a luxury EV maker in America. Of course, you also have to discount the China-US tensions and the possibility of delisting, but you're looking at a company like Lucid, who delivered, I think, 100 vehicles all in 2021, I believe. Their market cap is valued at 39. They're also expecting only about 14,000 vehicles in 2022. NIO just in February delivered 6,131 models. Like, so that's just, and this was valued at 39 billion. NIO is valued at 27 billion. Of course, Lucid is an luxury EV maker right now, but still, I just think, like, I don't know, I think the Chinese market, especially for EVs, is huge. And NIO is already an established automaker with still ridiculous room for growth. So I just think NIO is at a more attractive multiple than something like a Lucid Stock, even after accounting for maybe the Chinese risk premium. So the Chinese electric vehicle startup delivered 3,309 whatever, so different variations of their models. NIO's popular ES6, an all-electric premium sport utility vehicle for 6-7 passengers, was responsible for more than half of NIO's delivery volume, so it looks like they're having great sales. NIO's delivery growth markedly slowed in the first 2 months of 2022, largely because of Chinese holidays that fell into the sales period and a lower number of trading days in February. These two reasons also explain why delivery volumes at the other EV startups also dropped off in February, so the sequential decline in production and delivery volumes is likely only to be temporary. So also note that. XPeng experienced the largest drop-off, 52%, etc., etc. So deliveries, December, and this was year-over-year growth of close to 50%. January, 9,000, year-over-year growth of 33%, and February, only year-over-year growth of 9.9%. So hopefully we will see NIO start delivering more vehicles as we're coming into March, April, May. So a couple of catalysts NIO's facing is the release of fourth quarter earnings, which are due to be reported later this month, I believe in 12 days. Strong vehicle sales, growth in vehicle margins, and stronger than expected cash flow could remind investors that NIO is still a growth play. So they're expected to produce a loss of 12 cents per share, but the startup could beat expectations based on recovering vehicle deliveries in the last month of the year. So again, this could be maybe even a decent swing play if you just put in, a couple $100 or $1,000, you just know it is very, very difficult to really, you have to know a lot about the EV maker and what the market is going to do, because even if they, let's say, produce only a loss of 8 cents, which would beat market expectations, they could still find themselves down just because we are in an irrational market time right now, especially with so much uncertainty going on. So yeah, revenue estimate of 1.55 billion. So what could also be considered catalysts are the release of NIO's ET5 and ET7 sedans. The ET5 is expected to see the beginning of deliveries in September 2022, whereas the ET7 flagship will start to see deliveries at the end of the first quarter. Both product launches and details about their pre-orders are likely to positively affect shares of NIO. However, I think on the flip side, you also have to consider the slowing of China's economy, which has hurt Chinese companies like Alibaba, Baidu, and NIO. So we will have to see what the Chinese consumer is really looking forward to going into this first quarter, because we have seen that the Chinese economy has been kind of slowing, especially since they've been taking a zero stance on COVID. Like whenever there's a case, the whole basically city or country locks down. In recent weeks and months, investors have become skeptical of stocks with high valuations. Very true. Look at any growth stock. Look at Facebook, for example. I mean, I guess you can't even consider that a growth stock anymore. That's also another play I really like. Based off of expected sales, the EV startup has attracted a significantly higher sales multiple factor of 2021. Growth prospects in China's EV industry also remain attractive, as China accounts for more than half of the world's EV sales. NIO is expected to grow revenues to an expected $5.7 billion to $30 billion by 2026, implying average top-line growth of 40%. So this could be, a decent play if you're looking in the long-term forecast and you're not really worried about short-term fluctuations. Okay, I mean, having the stock down by like 13% in a day, and I mean, if you're looking at the chart, like it's just been absolutely beaten down like a dog. We haven't seen this price since like 2020 in like July. So yeah, this could be ripe for a rebound. However, also be wary of the falling candles, okay? And they're just riding the lower Bollinger Band. What I like to do is pick stocks. See this candle right here? This is basically outside, almost outside of the lower Bollinger Band. We've seen a decent rebound from like 20 bucks to 23, 24 bucks, which would have been a nice swing play. Right now, I don't see these candles nearing the lower Bollinger Band, which to me seems like I could get an even better deal maybe a month down the line. You just have to be patient. So my price target for NIO, where I could consider myself buying, would be if you have another maybe 20% downward move, which would mean the stock is at like, I mean, I guess that's like around 14 bucks or something like that. I could see myself buying NIO. Let me know what you think. I'd appreciate a like and subscribe. If you enjoy this content, feel free to check out the links down below in my description, for example, to my free Discord, and leave a comment. But yeah, love you all. Take care and peace. Stay safe out there.